Hey everybody, welcome to State of the Market with John and Katie from Griswold Group. I'm Katie, this is my brother John, and we're going to give you an update on the real estate market. So to start us off, might be feeling like we're in a slowing market, things are shifting, but what's really gone on is we went from a very irrational market last year to a much more rational one. And what's happened is we're seeing a disconnect right now between sellers' expectations and a buyer's reality. So how do we understand what that means for the current market and where do we go from here? I'm going to send it to John so he can talk about his most favorite thing, and that is, of course, expected market time.
Hey everybody. Yeah, so expected market time, which is the time from when you hammer in that for sale sign to when you mark that home in escrow or pending, went from about 18 days at its lowest earlier this year and went up considerably all the way up to about 67 days, which was about 3 or 4 weeks ago. It peaked at 67 days and it's now starting to drop again. We're now at 61 days. So that's telling us that things are starting to stabilize and that slowly but surely buyers and sellers are starting to get more on the same page, because the reality is there's still a lot of buyers looking to buy and there's plenty of inventory, but we're not seeing a crazy inventory spike that is impacting home values. On the macro, sellers are still getting their price.
Yeah, and in general, we're actually seeing less buyers and less sellers in the market just in general. There's just a slowdown of activity, but it's fairly equal in terms of the sellers and buyers that we're seeing. It's just not the frenzy that we're seeing last year. And another interesting piece of data that we were looking at is that 72% of homeowners have an interest rate on their mortgage at 4% or less. So that means that most homeowners are saying, I don't want to move because I don't want to lose that interest rate. So that's definitely keeping inventory down. And on the other hand, you have buyers who are now looking at these higher interest rates saying, I don't know if I want to go there. And so that's what's causing this just overall reduction in activity at the moment.
And then you factor that in just the rise in values. When you sell and buy, generally you buy at a higher or equal price point to what you sell unless you're downsizing. And that rise in property tax basis is a big deal. I mean, if you bought in 17, 18 for, let's say, $1 million, you might have a $2 million house today. And so are you going to be okay with paying about $11,000 in property taxes? Now you're paying like $22,000 in property taxes? That's a big factor in people deciding to go to that next home, which is keeping inventory lower.
Okay guys, that's about it for us today. If you have any questions or want to chat with us, feel free to contact us anytime.
Thanks everybody.